Whether you trade Forex, crypto, or stocks, understanding trend momentum and direction is crucial for success in the markets. One effective solution is the use of the MACD oscillator, renowned for its ability to identify momentum and trend shifts. However, there's a better version of this indicator optimized for long-term momentum and pinpointing ideal market entry points without compromising accuracy. Unlike the basic version, which focuses on early momentum shifts, this version concentrates on longer-term momentum. We're discussing the MACD4C indicator, a completely free tool that has been forgotten. Today, we're excited to share a reprogrammed version of this indicator that we have created. It plots momentum directly over the candles, colors them based on strength or weakness of the momentum, offers the ability to work on multiple time frames, allows for optimization to suit different market conditions at the click of a button, and identifies potential entry areas within the momentum. If you want this upgraded version of the indicator, you'll want to stick around until the end, where we will provide it for free. We'll also share a strategy we have tested using this enhanced version, which you can use today to get better entries in the market. Let's start by understanding the original version. Click on the Indicator Search tab and search MACD4C. Select the indicator made by this user. Save it and add it to the chart. Let's quickly review the indicator's input settings by clicking this gear icon. Here, we find only two options, in contrast to the regular version that offers much more customization. The fast and slow line values, by default, are the same as in the original MACD, but their calculations differ. For now, we'll keep these values at default, as we will later introduce a version that allows easier optimization of these values. Moving to the Style tab, let's change the color 0 plot to an area plot. This adjustment makes it easier to discern strong and weak trending areas in the market. For the moment, this is the only modification we'll make. By adding the indicator to the chart alongside the original MACD, we can see how the indicator avoids false signals by focusing on longer-term trends. Consider this bullish example. The original MACD would have given 4 false bearish signals, but the MACD4C avoided this. When the indicator plots above the 0 line and the plot is green, it indicates bullish momentum, suggesting we should consider buying. A bright green plot indicates strong momentum and ideal entry points, while a darker green suggests weaker momentum or a retracement. The opposite is also true. When plotting below the 0 line, it signifies bearish momentum, pointing towards selling opportunities. Here, dark red indicates strong momentum, and light red indicates weaker momentum. While strong momentum is great for entries, weak momentum areas can still be used, as it often indicates a retracement. Hence, in conjunction with your analysis, these can serve as potential entry areas for continuing a trend. The upgraded version of this indicator, which we'll share soon, simplifies the interpretation of these areas for practical trading and includes built-in optimization methods. Make sure to stay tuned until the end of this video to access this enhanced version. When using the most basic method of interpreting this indicator, we would take a buy position when the momentum shifts from bearish to bullish, with the expectation that the price momentum will continue bullish. Conversely, a shift from bullish to bearish momentum would signal to enter a sell position, anticipating a downtrend. However, using the indicator like this can lead to a number of losing trades. It's important to know that momentum shifts are not always reliable entry points. The market could reverse in the opposite direction immediately after a shift in momentum, highlighting the need for a more nuanced approach when using this tool. Another method of using this indicator, which we briefly discussed earlier, would have us wait for the momentum to change from either bullish or bearish, and then seek an entry on a pullback to capitalize on the momentum. For example, here is a scenario where the price momentum shifts from bearish to bullish. We can also see we have a bullish market structure based on price action. As the market forms higher highs, our strategy is to enter during a retracement. If we see the momentum shifting to a weaker momentum, this could indicate a retracement, at which point we would look to buy. We would set stops at a recent swing low and allow the trade to run. If the trade shifts back into strong bullish momentum, we would hold our position until another retracement is detected. On the other side, if the market momentum is shifting from bullish to bearish and there is bearish market structure, we would wait for a retracement. Once we find a retracement, we would enter a position at a reasonable level based on price action, setting stops at a swing high and allowing the trade to run. This approach can sometimes result in strong moves or quick exits. While it's possible to be profitable with this method, it tends to have a low win rate, which can be challenging for many traders to remain disciplined through losing periods. Another strategy for using this indicator involves detecting divergences between price and momentum, which can signal an early indication of a trend change. Let's look at an example. Here the price is making higher highs, suggesting the market is in an uptrend and you would typically expect the price to continue rising. However, if we observe the oscillator, while the momentum remains bullish, its peak is lower than the previous peak. This could indicate that the momentum is weakening. In such situations, when we identify these divergences between price and the oscillator, instead of entering a buy in the retracement area, we might want to execute a sell, setting our stop above the high and anticipating the price to start trending bearish. Here's another example. Price is bearish, consistently making lower lows. But, similar to before, the oscillator begins making higher highs. In this scenario, instead of seeking sells in the retracements, we would look for buying opportunities, placing stops below the swing low and expecting the price to start trending bullish. As you can see, there are many ways to use this indicator. Even on its own, it is an excellent momentum indication tool that can help you find profitable trades. However, we're going to share with you an upgraded version that simplifies this process by plotting all this information directly on your candles. This version allows you to detect momentum based on a higher time frame and shows which candles are best for entries. It also color codes the candlesticks, providing a clear visual representation of the overall momentum, and on top of that, we will share with you a secret strategy that you can start using today. But before we continue, if you're enjoying the video, don't forget to like and subscribe so you won't miss out on future videos. We'll be sharing even more upgraded and reprogrammed indicators for free. Also, if you're interested in trying out the top-rated premium indicator on TradingView by LuxAlgo risk-free for 30 days, you can use the link in the video description. Your continued support truly helps the channel grow. As promised, here is the upgraded version of the indicator. This version enhances your chart by coloring the candles according to the market momentum, and by placing bullish and bearish labels to indicate when the trend has shifted. It further clarifies the strength of the momentum. Green indicates strong bullish momentum, while teal signifies weak bullish momentum. In a bearish trend, red denotes strong momentum and orange represents weak momentum. Let's dive into the settings of this indicator. You'll find an option to adjust the mode according to your trading style, whether long-term, short-term, or medium-term. For our strategy today, we'll set it to long-term. There's also a trend detection feature that allows you to enable or disable the momentum labels on the chart, as well as the candle colors. Another handy feature is the possible entry candles option, which provides additional signals highlighting the most optimal candles for entry. We'll keep this enabled. Furthermore, this indicator can perform calculations based on a higher time frame. So, even if you're viewing a 1-hour chart, the indicator can assess momentum based on the daily chart. You can access this version of the indicator for free by using the link in the video description. Here's the strategy. First, click the Indicators tab and search Stochastic RSI. Click on this one under Technicals to add it to the chart. Go into the settings of the indicator and change the time frame to a 4-hour time frame. For trading, you can use any time frame below the 4-hour. For a sell position, we first need the indicator to display a bearish label, confirming that the momentum is bearish. Then, we wait for the stochastic RSI to enter the overbought zone. Once it's in the overbought zone, we look for a potential sell entry signal. Upon receiving this signal, we execute a sell order and set stops above the recent swing high. We then hold our position until the stochastic RSI changes direction. In this example, the stochastic RSI helps identify inner overbought and oversold areas within the bearish momentum. We seek an entry candle while in the overbought zone during bearish momentum, then execute our trade and trail our stops using the stochastic RSI. For a buy trade example, we see the market is bullish as indicated by the label. We wait for the price to enter an oversold zone. If there's no entry candle detected in an oversold situation, we wait for another opportunity. When an entry candle is detected in the oversold zone and the momentum is still bullish, we execute a trade with a stop below the recent swing low. We will the trade run until the stochastic RSI lines cross back to the downside. By not setting a predefined take profit, this strategy allows for a dynamic take profit, which can lead to significant gains. It also enables a swift exit from the market if the price does not trend in our predicted direction, as demonstrated in this example. There are various other indicators that can be used to trail your entries. Although the stochastic RSI is excellent for pinpointing overbought and oversold zones, you might consider experimenting with another indicator to manage your stop. One promising approach we've been exploring is the trend catcher feature in the Luxalgo signals and overlays indicator. As illustrated in this example, if I had trailed my entry using the stochastic RSI, I would have exited the trade prematurely. However, using the trend catcher kept me in the trend for a longer duration. This difference arises because the stochastic RSI tends to oscillate between 80 and 20 level, whereas the trend catcher does not face this limitation, offering a more sustained view of the market trend. We hope you found this video on the MACD4C indicator insightful. This tool is extremely effective for accurately determining market momentum. Don't hesitate to test out the upgraded version and share your feedback in the comments. Additionally, if you're interested in accessing the trend catcher overlay from the Luxalgo signals and overlays indicator, use the link in the video description. This link will also grant you access to the oscillator matrix and price action concepts indicators for 30 days risk-free. Remember to like and subscribe for more content like this, and we look forward to seeing you in our next video.